So good afternoon. Today, now here is the 23rd of October, Monday. This is the weekly review and weekly analysis for the week 23rd to 26th of October for this coming week. Very important news. Bloomberg announced that BLACKROck clients pull $13 billion from long-term funds, and as you can see now in the headlines, this market first outflows since once of the pandemic. Clients added $15 billion to cash management money market. What the news means I tell later in this video, because this news is really very important for today and also this week and the coming weeks development in NASDAQ, S&P and Russell. Then Financial Times writes, BlackRock profits jump in volatile quarter despite long-term outflows, and the outflows caused already since 4 weeks ago. Therefore we have a bear trend in the market, what will continue, and also to have more volatile times. Now let me check what they're writing more. BlackRock beat expectations with profits that rose 13% year-on-year, but volatile markets drove down assets under management and resulted in the group's first quarterly net long outflows since the early days of the COVID-19 pandemic. The world's largest asset manager reported adjusted net income for $1.6 billion, powered by faster than expected growth of its Aladdin risk management platform. Outflows were driven by $19 billion redemption from its index funds by a single overseas institutional client, while money continued to come into exchange-traded funds, bringing net long-term outflows. So this is the most important information. Net long-term outflows. From the end of June, where investors continue to park more money in cash, so total flows were markedly positive. Chief Executive Larry Fink was disappointed by the soft flow numbers, but added that the group was positioning to capture the money in motion. The long-term trend of clients consolidating more of their portfolios with BlackRock is only accelerating, and underlying business momentum remains strong. Of course, he needs to say that to make the clients satisfied and calm. So let's check. What else do they say, what we already knew? So nothing new here. All right, now going to our second fundamental analysis. And therefore we go to the US dollar chart, and we can see here that the US dollar clearly latestly on August the 10th of this year, but the sell signal in NASDAQ was at around 18th to 20th of July of this year, is now in an uptrend again, so broke the bearish trend So we can see here that we currently the US dollar, because of the cash off and sell off dollar and intervention of Israeli banks, made a pause, and therefore a drop below 105 will take down the dollar to around 103.80, 104. If it happens on the same time in NASDAQ at the bottom, we will have a reversal. So we need to wait first of all till this channel, the price leaves this channel, and then we expect a bullish reaction here. And if the US dollar is returning into this channel, then we can sell the NASDAQ again. If it doesn't not happen and we will have here a pullback, the dollar come back, then we start to buy, but very slowly, not at once, as the fundamentals are clearly and totally bearish for the NASDAQ. So we have some earnings also this week, and the bears are laughing at this moment at the bulls, as the bulls feel happy if here and there sometimes a positive news about positive earnings of NASDAQ is coming. But if we look back, we see that mainly Nvidia and Tesla are very under pressure currently. Tesla below 4% minus, Nvidia and the other tech stocks the same. Then we want to check now the euro dollar, and we see the euro dollar exactly the opposite of the dollar, is also in a bearish channel. So now we start with NASDAQ, and now if we look at NASDAQ, it's really interesting, as we can see that the volume profile is here already projecting a bearish move, or forecasting a bearish move, that the uptrend since the beginning of the year was already predicted to be a well, temporarily bull trap trend, right? So we have bull traps in the movement, we have local bull traps, and we have bull trap trends. So, and while the fundamentals have been all time, nearly more than 80% of time bearish, so it was caused by the insider buys and the hype of 1, 2, around 3 or 4 companies at all, right? So the whole move is just based because maximum 3 or 4 tech companies started their earnings, and there are a lot of institutional traders and big institutions who mainly buy the indices to make profit for longer term, right? So, and as in after the Ukraine war, the market got into pressure, bearish pressure, because the fundamentals have been very bad for the stocks. They need now to show positive results to their clients. So, and they don't care what to buy. they start to buy, and we know that the big institutional clients have a lot of money, very huge amounts of money, but some way there are other big institutional clients and also hedge funds who need to compensate their losses, and therefore they have somewhere here made a little bit profit but tried to cover their losses because of 2021 after Ukraine war, and now they immediately are getting out of the market and positioning themselves in cash. The $15 billion outflow of BLACKROck, where is the money? The money is now, we can say, an inflow to the US dollar, because if you put your money in the bank, you get much more interest rates for the time being, and to the bonds. For example, 10 years, US 10 years, US 2 years bonds for near term, US 5 years, US 1 year, US 7 years yields, right? So the yields are offering now to the investors much more money, and that makes the market very attractive to them. We see here that after a while of now technical, so after a while of that, the market made higher highs and higher lows. Finally here the market was not able to make higher highs, so the next possible high was lower. Then the local low broke, the market drove back, and it was the beginning as BlackRock started to take out the money and to put it into cash and the bonds, right? You see how big now the volatility is becoming. So we have the next local high here, then the market makes a new lower low, the market makes another low high, and now we are here. So expecting the market will make new low, getting back, and how long? Well, can say that the target will be 12,044. On the other side, if we look closely, we see that the gap at 15,500 to 15,200 is still not filled. Then we will have another gap at 14,000. The next low gap must be filled is at 13,015. The next gap is at 12,850, and look here, it's continuing. Then the next gap is at around 12,400 to 12,044. So this is here, and we have some minor gaps in between the market needs to fill. And as long as the gaps, I look if we have another, yes, we have also another one. If the market breaks those levels, then we possibly go back to around 11,000 to 11,800, right? So, and therefore the usage of classical technical indicators is not working anymore, especially if the market is targeting these areas. Classical technical analysis is what you usually use, right? For example, the concept of higher highs or higher lows, or trend lines, or dunking channel, or well, the momentum. The momentum is just locally on lower time frame is you get some good confirmation, but Against volatility, all those concepts will fail. And we see that currently the US dollar is somewhere a little bit under pressure. We have rising crude oil prices, currently at 87, found a bottom to profit taking. And I guess we go again near of $90 terms, and breaking that 95 and then $100, that will generate much more bullish pressure for the US dollar again. And once that happens, the market will drop down very fast. Why? This is very simple to explain. We see this level. This is the highest possible volume level we are currently, right? You see here the consolidation phases, for example. So we have here the gap, but we have another gap and another gap, and we see here another gap in the market. And once the market arrives this area, the market will drop down very fast, but we will have also a big or fast reaction to the market before the bears or the sellers start to market to push here. Somewhere in around 12,800 to 13,000, I expect then a long time, so around maybe 4 or 6 week consolidation. It does not mean that the market will not have any movements, but we will trade in a range, right? So this is on 2-hourly chart. Where you take your entries or exits, I don't tell you, I never tell that, because that's your job, that's your responsibility. So this is the big picture always on your mind to keep care about, to the strategy you are following, because everybody is following another strategy. Then on the chart, on the minds, and also the chats, a lot of people are giving you signals. I say also sometimes sell or buy, but what I mean by that is the trend is bearish, or I am selling, right? So I sell, for example, I am selling, I am buying, but it does not mean that you follow blindly my recommendations. So please don't follow blindly the other people's recommendations. Why? Because first of all, you have your own account balance size. Secondly, there are some people who are just giving you recommendations, telling they are bearish or selling, but in reality they are trading on demo accounts. That means they don't trade with real money. Understood? So you get in a very big trouble later, and it does not matter if you accuse or start then offending other people, because the only person who is responsible for your own account is yourself. You have the responsibility to keep care of your own account. It's not my job, it's not other people's money. And also some telling, yes, if you're sharing signals, there are a lot of there are a lot of people who are following your concept and these and those. Yes, but you either watching this video are not paying me, right? Let's say the last week or the last 2 weeks. So if you would have followed my recommendations, you would have made now a lot of money, right? But have you ever asked me for my PayPal account or giving you my account to pay me some of your profit, transfer some of your profits into my account? No. So why are you expecting me then to tell you the exact buy-sell signals? Then there are a lot of companies who are selling, buying and selling signals. Also the same, like in social media, banks are in behind of them. They first take their own positions and tell the people, okay, now announce and contact all people on social media to buy and sell. So but all the signals are too late, right? But that way I am doing it here. I'm showing you how the market is working. So I'm working you, here is the map, here is the route, here is the current price of NASDAQ. Here are the potentials that the market will break. Breaking that, the next expected zone is something here. But where to enter, when to enter, where to put your stop loss, where to put your profit targets is dependent on your own personality, character. Meaning if you are a conservative trader, if you are a risky trader who is trading aggressively, if you are a trend follower, if you are a trend follower on lower time frames, on higher time frames, or are you a scalper, right? Are you someone who is a day trader, meaning you just take the trend, doesn't matter if you make losses or winners, have some winners, you close your position after the bell, and so on. It depends on you. So therefore, this is another reason it is not possible to give someone here clear buy sell signals. The opportunity is only my students and people who are in my classroom, because they pay for that, and we have also profit sharing. They get the exact signals from me. That's the difference. So but to join these classes, so you need to have a membership with on my website, and there is a $10,500 fee at the beginning, and a membership of $490 per month, and the profit sharing then what is already in the contracts. So I guess you are watching this, you will not be able of that, right? So we don't need to talk about it, just an information side. All right, now we have also some more fundamentals. We go back, for example, to the calendar to see what kind of data are here in the US. And nearly today we will have no data anymore. The most important day of this week will be Friday, as we have the CPI definitely, and on Wednesday we will have a big, well, that's a speech of Jerome Powell. And also tomorrow at around 14:55 we have the Red Book, and also some further US data. We have, for example, S&P Global Composite PMI Flash, we have manufacturing PMI Flash, we have Global Services PMI Flash, we have Richmond Manufacturing Index, Richmond Shipments Index, and what's more important, maybe if you are working with fundamentals, 2-year note auction. That's very, very important. The previous number was at 5.08. If the current number is above 5.08, then we will have much more rising bond prices, and that's not good for NASDAQ, right? So then we have also API crude oil stock change. If the stock change are rising, meaning the crude will go much more higher. And that's it. We have some minor data that's not so important. Let me check again. Yeah, that's all. And for oil, we have the EIA data coming at 4:30 on on Wednesday too. So really interesting week, and therefore the first priority or target of the market is to fill the gap, and there we expect the reaction. The current state is bearish, as I told you, and then look forward for the next gaps what are coming, and they need to get filled. And there are a lot of, especially NASDAQ, because of the bull move of since the beginning of this year. The move was relatively very fast, so that caused a lot of moves. But once reached, the good news is once reached the last possible gap below, the market will turn higher, and then it is also possible that we start making then higher highs and getting back to the 16,000 area and higher, right? Nevertheless, check the whole time already this area, and also watch closely the fundamental data. Very important, because nearly every possible news what's coming out is has some kind of impact on the market. And it can also happen that you have some positive news but the market is going down again, and that's, as I told you, because of the fundamentals. The fundamentals are so strong. Imagine yourself, if you take out $15 billion out of your account and put it into another market, how the reactions will be, right? So, and that's the reason the big institutions are replacing their money somewhere else, and in cash and in bonds. And that's the reason that the market is now more bearish. All right, so I wish you having a good trading week, and yeah, bye bye.